Morning, Steve Free in Chicago with the morning grain comments. Happy Tuesday to everybody. Market's fairly quiet overnight. Yesterday we saw open interest up a little bit in the beans, meal, oil, but down in soybean oil and wheat. As far as news, a lot of data out yesterday. USDA said corn planting is 75% done, 70 is average. Still lagging in the east where Michigan's 34, Indiana 45, and Ohio's 34. Those states add up to 1.1 billion bushels of corn this week. We should have drier weather and see if they can get it planted. All told, there's 3.6 billion bushels of corn yet to be planted. Still plenty of time to get it planted. We did see one private group lower their estimate of corn acres, and their yield's 166, which is a 14 billion bushel crop. Still adequate. But we still have a lot of the growing season ahead. Soybean planting is 36% done versus 32 average. In the south, Arkansas is 62. In the east, Ohio's 10, Illinois 29, but in the west, Iowa's 43. Winter wheat crop rated 62% good to excellent. Improvements in the hard red winter wheat areas. A little bit of drop in the soft red areas. Spring wheat planting is almost done at 89% done versus 64 average. We did see the USDA come out and said that they thought in 2016 and 17 China would import about 16 million tons of grains versus 21 last year. This is a little bit higher than what some people fear if China has this grain reserve program policy. The estimated DDG imports 4 million tons versus 5. We did see one group lower their Brazil corn crop to 76 million tons. And the beans to 97 million tons. That could increase demand for U.S. exports. They continue to estimate the Argentina soybean crop around 56 and the corn at 25. Yesterday the funds were sellers of meal. They were buyers of corn and soybean oil. 6 to 10 day and the 8 to 14 day calls for normal to above temps and normal rains. And when we look at the technical side of the marketplace, we've got July beans trading around 1068. 1057 is a real line in the sand. You could see some sell stops below that price level. The short-term market picture remains a correction, maybe a consolidation phase, but still looks long-term as positive. Some people think that if we were to get out of this congestion, we might trade above the $11 area. As far as the corn is concerned, overnight we're at 394. Had a nice little bounce yesterday. It might be due to some of the issues that we see down in Brazil. Some people think that we will trade over that $4 level. The closer you get above that level, the more farmers selling we might see. As far as the support is concerned, you've got that 380 area, 384. That type of area is where we have some of the 10 and 20-day moving averages. July wheat is stuck in a trading range. Let's call it 450 to 510. We're at 474. You've got the 477 is the 20-day moving average. Could be some stops above that area. And then really there isn't any reason for the market to either break out of this congestion. If it were to break out, assume there's no weather problem, it probably would leak a little bit lower. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.